Well, good weekend, all. Ira Epstein, and here we are on Saturday, the 20th of December, 2025. Boy, happy Hanukkah to everybody. We've got Christmas coming up, and then the Happy New Year to all. So what a time. The triple witching day on Friday did not live up to its reputation. Volume was up 50% more than normal on average. It was just massive in its scope. You can see all the stock indices were up. Everybody's writing, is this the beginning of the Santa rally? And sometimes people don't know what they're talking about. So before I go any further, why don't you and I take a look at what the Santa rally is and take a look at this. First, we're not going to get any U.S. economic data reports on Monday. There's just nothing scheduled. But when you get to the Santa rally, the S&P 500 has climbed 3/4 of the time, 75% of the time, in the last 2 weeks of December, rising on average 1.3%, according to data compiled by none other than Citadel Securities, Ken Griffin's company. According to the Trader's Almanac, Yale Hirsch, who developed the theory, the Santa Claus rally itself, that encompasses the last 5 trading sessions of the year and the first 2 of the new one. Now, when you carry this even further as to how seasonality goes according to more research and others, you get other high probabilities that carry from this period right now into approximately the middle of February. So this is often where you get the market trying to move to the upside. Again, it doesn't have to, but most of the time, history shows it has. So as we come back, you can see you had a small rally on the energy markets, at least back over in the March contract, the 60 level in Brent, but it still, to me, is a funny rally because it's not demand driven. It's lack of supply and what Maduro can and can't do as he tries to rally other countries that they used to be a stronger affiliation with, like Colombia, to come to their aid. What kind of aid are they going to do when you've got all that naval power from the U.S. with missiles and everything right outside of the country? There's nothing that's going to happen there. Don't believe it. It'll be a lot of verbiage. It won't be real military action. And I don't know that the U.S. has to put boots on the ground. You know, you can economically starve them. Are you aware that Chevron is able to get their oil in and out of the ports in Venezuela? They have a deal with the United States, and those ships are going in and out. It's the ones that Trump has on his sanction list that aren't making it. The dollar up a little bit, but the word is a little bit a mixed bag in the currencies, with the exception of the yen, which saw the Bank of Japan increase its interest rate. First time, by the way, of the year. And the question is it one and done? And that's what hurt the value of the yen, because Governor Ueda really didn't give a good accounting of himself. In the British pound, you held on to a small gain. As you know, we saw that the Bank of England on Thursday had cut its interest rate. In the grain markets, you're still not going anywhere. So let's take a look at the chart action and try to get a feel, if we can, from the markets as to what you can do. In the S&P 500, on a monthly chart of just closes, you can see right here that the market would be at an all-time high of 0.4% at 68.87. When we look at a weekly area chart of closes, you're right back into this whole area here. If you look at the high here, that was 69.05. You're knocking on the door of that right now. When you come back and you look at everything here, you can see how the market had its nosedive. Some people will even say on the weekly chart, this is a mini head and shoulder formation. And if you can clear this level, 69.28, they're going to say it might be breaking out to the upside. So keep your eye. That's going to be a very important area on the chart. The swing line, if you take that out on a weekly chart, in fact, if you don't take out the low of this week on a weekly chart, you have the swing line with higher lows and higher highs. That would turn it bullish. The market is held against the 18-week average of closes, pretty much as I told you I expected it to do. The Bollinger Band is the next stopping spot, but that's even higher at 69.82. And that number, if we start up, will go even higher than that, probably over the 70 level very quickly. And you are, in terms of momentum, into an overbought area. So that's the way that I analyze it. In the Dow, you're knocking on the door of the resistance. The resistance is the upper Bollinger Band. I can even adjust this a little bit, I think, for us. Let's see. Yeah, there you go. There you are. Those are the exact numbers. And you can see where the market is fighting its battle. Lower low, higher high against the upper Bollinger Band. We'll see if we can punch through that. In the NASDAQ, to get things up and going, you've got to take out the highs of last week of 25,870, 75. So you've got to take that out to get the market bullish. But again, another market that held its 18-week average of closes. And in the Russell, all the market need do is not take out this week's low, and just like the S&P, that would give you higher lows, higher highs. Can it clear all this? And remember, you only stay over the upper Bollinger Band 5% of the time, but you're within striking distance of the all-time high now. In the DAX, the market's gone into a stall period. And now it's really got fairly wide Bollinger Bands, but I want to narrow them in even more and show you how they look as you bring the chart in. Lower high, higher low. Let me do it this way. Lower low, higher high. Said that wrong. And you're fighting in your battleground here. But you're really caught in the Bollinger Band high and low and not going out of that temporarily. In the bonds, the market caved in. It is very oversold. It could be going to the 114.14 area. There's nothing to be bullish about. And the question is, in the 10-year, do we have a trend? And the answer is really no. What you have is a market that for a moment was able to get back over 2 weeks, basically, the 100-week average, and then fell back under it. So that doesn't look good. But the pattern is not conclusive. You've got a higher high, lower low. If you take out the lows of last week of 112.0150, which I had right up here, I'll do it again. That probably sets up the market to go to the lower Bollinger Band, and the value on that, let's see if I can get this to move over as we do it. Yeah, there we go. And the value of that number would be 111.31.5. Then in the dollar index, the dollar has been in a steep fall now for how many weeks? Basically, peaked out 5 weeks ago, and it's been dropping since then. This week, it managed to come back and not really stay down near its lows. The resistance is the 18-week average. In the euro, you went up and you kissed the area of the upper Bollinger Band, and from there, the market started acting with the resistance point, which makes all the sense in the world. It did that before here. So now the market's got to prove what is it on pullbacks, and that'll be the interesting part. The Canadian dollar's been on a tear to the upside. You had an outside week down right here, and that was the week, as you see, of November 21st. If you've taken my outside course, you know that if you take out that high before you take out this low, that week's low again, you often go at least to the closest main moving average. It did that right afterwards, 2 weeks later, and it's still running from that. But that was your signal. Now in the yen, you can see how the market's reacting to the cut. You had a huge outside week to the downside. The market stepped out of a pattern that it had of higher lows. Early on, it was higher highs, and that was all lost by the end of the week. In Bitcoin on a weekly chart is trying to make a stand right here at the 85,000 level. You've heard me say that to you over and over. I think I said it almost every day during the week that I think it's going to try to make it stand right there, because between that and the Bollinger Band is where the support came in. You'll have an idea that it's done it and done it successfully if you can take out 94.95. But, that's from here where you're at, $6,000 away. And if it does, it might be going back to the 105 area. But traders would say that was it. The washout is probably complete. In Brent versus WTI crude, Brent gained a little bit of value, got back over the 18-week average of closes in red. In the Brent itself, well, you're getting a bounce because you're at the lower Bollinger Bands. Look at this. Here you are. You're here in the WTI. You're knocking on the door in the heating oil. So it makes sense that the energy markets are trying to play a little bit of a game right there. Now, what I think traders are going to do this week is they're going to play around with the pivot point numbers. I've discovered this over many years of trading, that once you get into these thinner volume days, and they will be coming now that families have left for the holidays and where they're going to spend Christmas and so on. So that's what's going to happen. So as I look at it, you should take a look at what we've got. This is a free charting course that we have. I teach you my ideas on it using the pivot points themselves. And then from the pivot points, I show you how to use slow stochastics with it. So when you put it all together, you get an idea of what I believe in. You can either go to iraepstein.com, you can move your cursor to the top up here, or you can move over here. And if you're on YouTube, it will play from that angle. I'm Ira Epstein. You have yourself a great weekend. I'll catch up with everybody on Monday.